Revaluation of assets and liability. Due to reconstruction of partnership firm, the first impact will be change in profit and loss sharing ratio. After that, the value of assets and liability will be changed. Suppose an asset which was acquired at 10 lakh, now its value is 15 lakh. So that is a profit in the book of 5 lakh. So this profit out of revaluation, or if there is loss out of revaluation, will be distributed amongst the old partner. Before giving admission to the new partner, the old partner will share this profit among themselves. Suppose two partners are running business since 10 years and whatever profit they have made, they won't share with the new partner because new partner hasn't contributed anything. So this profit or loss on revaluation will be subject to distribution among old partner in their old ratio. So for the purpose of giving effect of revaluation of assets and liability, a separate account known as revaluation account, also known as profit and loss adjustment account, will be opened in books of partnership firm, where effect of all increase or decrease in value of asset will be given. See, at the time of giving accounting effect of revaluation, if there is increase in value of asset, it is called profit. If the value of asset decreases, it is loss. If liability increases, it is loss. And if liability decreases, then it is profit. So the value of this profit or loss will be given through revaluation account. Its first effect will be given to revaluation account and another effect will be given in the balance sheet. So preparation of balance sheet will be covered in 5th and 6th chapter. Admission of a new partner and retirement of an existing partner. Basically, this revaluation part will also be covered in that chapter. But right now, I am giving you explanation. I am explaining you. If from this chapter there is no question in your exam. Exam आना वाली कोई question पूछा था नहीं. No question will be asked in your exam on the basis of revaluation from this chapter. But still, a revaluation account is basically nominal account. That means any expense or losses will be debited and any income or gain will be credited. Increase in asset. For example, in the old balance sheet, any asset like machinery was given at 1 lakh. Now its value has been determined at 1,20,000. So there is increase of 20,000, which will be recorded to the credit side of revaluation account. Same way, if there is decrease in value of asset, it is loss. So it will be recorded on the debit side of revaluation account. Then if there is increase in liability, means you have to pay more amount, then it is your loss. So it will be debited to revaluation account. The treatment of liability will be opposite to the asset. If there is decrease in value of liability, you have to pay less amount. So that is your gain, your profit, and it will be credited to revaluation account. Then bad debt, bad debt reserve, new minus old, or you can say bad debt or bad debt reserve given in adjustment minus given in old balance sheet instead of trial balance. Same way, discount reserve on debtors, then outstanding expense, income received in advance, all will be debited. Unrecorded liability will be debited. Prepaid expense, outstanding income, accrued income, or you can say income due but not received. Any unrecorded asset, will be credited. So these are the effect of the adjustment due to increase and decrease in assets and liability. Then in the end, revaluation account will be closed. If total of credit side will be higher, the difference will appear on debit side. That is called profit. And the profit will be transferred to capital account of partner, old ratio. For example, there are two partners, so A and B. So it will be distributed among them in their old profit sharing ratio. If there is increase in value of asset, it will be added to the respective asset. Asset will be having debit balance. So the journal entry will be asset account debited to revaluation account because it is profit. That's why revaluation account will be credited. If there is decrease in value of asset, then entry will be reversed. Revaluation account debited to asset account. Then entry for provision for doubtful debt, that is BDR, discount reserve, bad debt. So entry will be revaluation account debited to BDR, to discount reserve, to bad debt. Then if there is unrecorded asset, accrued income, prepaid expense, so the same will be debited. Respective asset account, accrued income account, prepaid expense account to revaluation account. If there is increase in value of liability, it is our loss. And if liability is having credit balance, so if there is increase, it will be added to liability. So entry will be revaluation account debited to respective liability account. If there is decrease in amount of liability, the entry will be reversed. Liability account debited to revaluation account. Then entry for unrecorded liability, revaluation account debited to unrecorded outstanding liability account. Then revaluation account is closed. If there is profit, entry will be revaluation account debited to partner's capital or current account. And if there is loss, the entry will be reversed. Partner's capital or current account debited to revaluation account. See, this is what I have explained. Now, let's start with an example. Bhavna, Bharat and Bhumesh are partners in a partnership firm, sharing profit and loss in the ratio of 2:1:1. The following is their balance sheet as on 31st March 2017. Partners have decided to revalue the asset and liability as on the date of balance sheet. So this is simple reconstruction without addition and retirement. So here there are three partners. Old ratio is 2:1:1. Now the value of land is 7 lakh. In the balance sheet, value of land is 5 lakh. And adjustment value of land is given 7 lakh. So there is increase in the value of land by 2 lakh rupees. Okay. Then value of building is to be increased by 1 lakh. You have directly given information that you have to increase value of land by 1 lakh. Then market value of machinery is 2,50,000 which is to be recorded. Now in the balance sheet value of machinery is given 4 lakh and market value is 2,50,000. So but obviously there is decrease in value of machinery, that is 2,50,000. Provision for doubtful debt is to be made at 20% on debtors. On the debtors of 1 lakh, you have to provide 20% for BDR. Creditors amounting to 10,000 are not required to be paid. So you don't have to pay 10,000 out of creditor. So that will be your profit. You are paying less amount as compared to what you are supposed to pay. Income receivable amounted to 5,000 and outstanding expense amounted to 3,000, which are to be recorded. From the above information, write journal entry in the books of partnership firm for revaluation and prepare revaluation account. Now, first of all, we will prepare revaluation account. From that, you can easily pass and now, value of land and building given in the balance sheet is 5 lakh and new value is 7 lakh. So there is increase in value of land and building. So it will be credited to revaluation account. So whenever we will prepare balance sheet, the same value will be added to the value of land and building. बराबर? Land, sorry, this is only land. Building ने adjustment अलग है. So the same will be added to the value of land in the new balance sheet. But right now you are not supposed to prepare it balance sheet. That will be prepared in 5th and 6th chapter. Then value of building is increased by 1 lakh. So there is increase of 1 lakh. Now by and to try to understand. Suppose એવું કીધું હોય કે બિલ્ડિંગ બેલેન્સ શીટમાં આપી છે 10 લાખ. તમને અહીંયા ડાયરેક્ટલી કહી દીધું કે વેલ્યુ ઓફ બિલ્ડિંગ ઇઝ ટુ બી ઇન્ક્રીઝડ બાય 1 લાખ. સો ધેટ શુડ બી એડેડ. અથવા એવું કીધું કે વેલ્યુ ઓફ બિલ્ડિંગ ઇઝ ટુ બી reduced by 1 lakh. So that will be subtracted. But our balance sheet માં for example building is given is 10 lakh. And તમને એડજસ્ટમેન્ટ એવું કીધું કે value of building is to be increased up to 12 lakh. Up to 12 lakh means new value will be 12 lakh. So increase will be 2 lakh. So whenever up to word is given, then you have to take difference. And whenever by word is given, you have to take direct amount. બરાબર? Keep this in mind. Then market value of machine is 2,50,000 which is to be recorded in books. Now balance sheet value is 4 lakh and market value is 2,50,000. So the difference is 1,50,000. That is decrease in value of machinery. That will be debited to revaluation account. provision for doubtful debt at 20% on debtor. So debtors 1 lakh, on that you have to provide 20% BDR. This is new BDR given in adjustment. If old BDR was given in balance sheet, it would have been subtracted from the new one, and final figure will be appearing in outer column. Creditors amounting to 10,000 are not required to be paid. So you don't have to pay 10,000 out of creditors. So that is your gain, your profit. Like creditors. Income receivable amounted to 5,000 and outstanding expense amounted to 3,000, which is to be recorded. Income receivable or accrued income, one and the same thing, which is income due but not received. Now we will close revaluation account. But obviously total of credit side is higher, 3,15,000. From that, the amount of debit side, 3,15,000 minus 1,50,000 minus 23, 1,42,000. This is profit, which will be transferred to partners' capital or current account if it is given in sum. Partner में भावना, भरत and Bhumesh. In their old profit sharing ratio, it is 2:1:1. 1,42,000 into 2 by 4. 1,42,000 into 1 by 4, each of this. This is the revaluation account. Now you can pass journal entries individually transaction wise, or you can pass combined journal entry also. Individual transaction wise entry भी था कि first entry करिए तो आपने यूँ जाएगा भाई land account debited to revaluation account, second entry था building account debited to revaluation account, third entry revaluation account debited to machinery account, fourth entry revaluation account debited to BDR account. Then creditors account debited to revaluation account. Then income receivable account debited to revaluation account. Revaluation account debited to outstanding expense account. And last, revaluation account debited to partners capital account. Or you can pass collective entry. I am showing you collective entry. The individual entry is given in your book. I am explaining both of that. Land account debited. Building account debited. Creditors account debited. Income receivable account debited. To then all effect of debit side. Revaluation account debited. Machinery account. To bad debt reserve account. To outstanding expense account. Then entry for closing revaluation account. बावला वाला करेंगे. पड़ी खबर बोलो कि नहीं? वेरी गुड. Next, Harish, Dhruvil and Manoj are partners of partnership firm. Their profit and loss sharing ratio is 3:2:1. Balance sheet as on 31st March 2017 is below. Now, land value is increased up to 3,50,000. So there is increase in value of land by 50,000 and building value is increased by 70,000. So directly you have to increase 70,000. Machinery value keeps up to 1,50,000. So old value is 2 lakh, new value is 1,50,000. So you have to decrease 50,000. Investment value decreased 20%. Investment is 1,20,000. You have to decrease 20%. So 1,20,000 into 20%, that is 24,000. Provide 10% for bad debt reserve and 5% for discount reserve on debtors. So first of all, you have to provide bad debt reserve, then we have to calculate 5% discount reserve. 50% stock value decreased by 10%. So out of the stock of 15,000, 50% stock, that is 7,500, will be decreased by 10%, that is 750. Unrecorded outstanding expense amounted to rupees 2,000. Unrecorded prepaid rent is 3,000. Go to corrupt. Revaluation account बनाइए बंदा. Now, first adjustment. Land value is increased up to 3,50,000. Up to means new value of the land is 3,50,000. Now, value of land given in the balance sheet is 3 lakh and new value is 3,50,000. So, you have to take the difference. So, there is increase in the value of land by 50,000, which will be credited to revaluation account. Then building value is increased by 70,000. Directly it has been asked, you have to increase 70,000. Then machinery value keeps up to 1,50,000. So old value of machinery is 2 lakh. New value will be kept as 1,50,000. So old value is higher than new value. So but obviously there is decrease in value of machinery. Difference 2 lakh minus 1,50,000. Then investment value decreased 20%. Investment is 1,20,000. You have to decrease investment by 20%. So it will be debited to revaluation account. 20% of 1,20,000. That is 24,000. Provide 10% bad debt reserve and 5% for discount reserve on debtors. Now debtors given in the balance sheet are 80,000. So first of all, BDR 10% of 80,000. That will be 8,000. And 5% discount reserve. Now try to understand. Debtors given 80,000, 10% BDR, so that is 72,000 On this 72,000, you have to provide discount reserve at 5%. बराबर? So 3,600. Then 50% stock value is decreased by 10%. Now stock is 15,000. 50% of that. So 50% of 15,000, that is 7,500. And you have to decrease it by 10%. So 10% of 7,500, that is 750. So that is decreased. So it will be debited to revaluation account. Then unrecorded outstanding expenses amounted to 2,000. So same will be debited to revaluation account. Unrecorded prepaid rent 3,000. Prepaid expense, that will be credited to revaluation. Here also, I think total of credit side will be higher. So 1,23,000 minus 50,000, 24,000, 8,000, 3,600, 750, and 2,000. Profit sharing ratio 3:2:1. Will be distributed in all profit sharing ratio, that is 3:2:1. Partners name Harish, Dhruvil, Manoj. So 34,650 into 3/6. And 34,650 into 2/6. 34,650 into 1/6. Now you can easily pass the journal entry. Land account debited, building account debited, prepaid rent account debited to revaluation account, and revaluation account debited to machinery account, to investment account, to bad debt reserve account, to discount reserve account, to stock account, to outstanding expense account, and last revaluation account debited to Harish capital, Dhruvil's capital, Manoj's capital. Or you can pass individual journal entry also.